Alright, boys and girls, this is the recap for the 1st of December, Wednesday. What are the reference points we have going into the regular session? We do have the weekly lows, which also happen to be the lowest point of yesterday's session, all the way down here below 45.60. And of course, we have this reference point area, which was relevant after yesterday's collapse in the middle of the day. You can see that the highs here were revisited in the afternoon session, and after the market bounced and found the lows overnight, we initially had a reaction but ultimately conquered that area, tested the backside, and left for a bullish rotation towards the weekly highs. On the way up, we have yesterday's highest prices in the regular session, which are right here in the 46-45 realm, and of course the weekly highs found before the collapse, which were, I believe, around 46.70. Yeah, this is the other reference point. So quite a bit of volatility, currently in a mature bullish rotation, looking at more particular movement on the way up. It seems that steep dips do not get followed through, and this is how the higher lows form. You can see another dip which got bought up again to new highs, and another one here which again got bought to new highs. Pretty steep directional movement within the initial legs of these progressions, and even further follow through still conforms to steep directional movement qualities. You can see shallow into deeper pullback movement. Here in the latter portion of the pre-market, we definitely were slowing down and consolidating around 46.25 with a well-defined area for the overnight highs. The opening bell found already a mature established bullish position here. Multiple deeper pullbacks were already holding, so it's definitely a situation where the branch is heavy with the buyers, and if the cage gets rattled, then it's likely that we're gonna get one of these dips which shakes out the complacent late participants in this progression. This is indeed what we saw pretty much a minute or two after the open, where as the lows start getting cracked, you can see the cascade of stops pressuring the market to lower prices. Of course, we're expecting at some point that this dip will get bought if the buyers are still in control, because this is the pattern that we have seen work multiple times here overnight, every time on higher lows. So we have the area which suggests where the market should not get to, and potentially, or maybe this is the lowest point that it could get to before the bullish progression gets demolished. So we're expecting some type of a higher low. Of course, we got a lot of strength at the open and a good overextension, so if you're willing to pull the trigger on a short based on the massive amount of positions that got built up here, which you expect to get a significant bearish reaction, then you should be looking for one of these early shallow pullback trades. Unfortunately, not much was offered after here we cracked the ice, and the initial collapse here is not really offering any reasonable prices here. However, there was a decent slowdown and pressure on the way down, so if you kept your stop behind this edge, you might have had a chance to participate here with the overextension. This is a reasonable opportunity to open the session with, unless you were already long somewhere in the late pre-market, holding a bullish position from a solid price deep enough, which would have allowed you a marginal stop and an attempt on breaking the overnight highs, which was seen previously this week. I believe yesterday that was the case at the open. Yes, this is the open, and yeah, we actually cracked the overnight area even before the open. Then we had a retest, but ultimately we headed higher, so expecting some type of a bullish rotation here today as well. This is really the opportunity that you have, and only one follow-through chance here. One deeper pullback opportunity is also reasonable somewhere in this vicinity. Unfortunately, in this particular sequence, we had a stair-stepping pullback, which is somewhat problematic. You can see that the lean towards the first area got arrested by the proximal edge, and then price went a little bit higher to continue that stair-stepping motion. Notice that this is exactly what we expected, some type of a higher low. So as soon as we get I would say somewhere here where the market is consistently refusing to get back below the mid-band, you can see at least 3 rejections, solid cross here, linear box throughout most of this participation, suggesting that, well, that might be all for this rolling flow. Of course, it's on the larger scale, this familiar pattern, but still, we're flexible with our scale and adapting to the scale which the market is looking to enforce. You should definitely be working volatility adjusted stops, 3+ points here, significant volatility volatility. It appeared that this might be what we're getting, but the market ultimately slowed down and respected the deeper pullback zone and then pivoted back to the upside. There was a bit of a 50-50 moment here where the buyers and sellers wrestled just around 46.15, but ultimately the buyers won. And once again, is the behavior that we have seen: steep movement out of the hole and off of a higher low, looking definitely towards a higher high. One area that you should be looking at this point is the regular session lowest point right here. This is potentially a significant reference point that might come into play later during this session. So I'll place it right around here, right below 46.10 or between 46.05 and 0.10. Lots of strength to the upside, virtually guaranteed attempt on the top. Unfortunately, the only opportunity offered here after the initial leg. By the way, good crackle opportunities here, but of course they're fundamentally aggressive placements. You might or might not be interested in such aggressive type 1 opportunities or probabilities, if you will. Here there was a classic alternative pullback with the 3 taps and the market going horizontal, but unfortunately we were already working the area. You might or might not like this risk versus reward. Clearing the area on steep directional movement in thin air, 1 tap on the backside of the area, probably one of the easiest, lowest hanging fruit opportunities of the session. Tap on the backside, deeper pullback, strong momentum, backside of the area. Virtually everything here, both on the macro and on the smaller scale, is suggesting that you should be picking up the long idea and carrying it towards what it seems initially yesterday's highs around 46.45, but probably eventually even higher, since it seems that the market is very relentless even on the larger scale. Good stair-stepping action here. Unfortunately, the shallow pullbacks here did not lead to the expected overextension, and we actually got some out-of-band respect. Return to the area one more time. This is where you have a choice of what you want to do. One potential exit is as the curve breaks and you get close to the mid-band. The other one is to play defense with the area and give the market one more attempt to the upside. If you gave it another attempt, then this is really problematic. So you're now caught into a box. We have already seen what the market does when it starts to bend the curve over. It tends to look for one of these much deeper pullbacks. So you should manage this one on a short leash, since again the long position is getting crowded and it's likely you're going to get an event back below this overnight reference point, which is the 46.26 to 28 resistance area. So either a cautious exit somewhere here, maybe a re-entry if you like here the respect of the area. This is the last place from which the market should go, but at this point again it's somewhat suspicious and the probabilities are not really that good. You see that we started to develop an inclination for lower highs and lower lows, and ultimately the ice crack here after the end of the retail hour. 10:30 steep dip. Now the question is, how much is the market going to achieve after this? I believe it's about the 4th steep dip here. Yeah, we're getting at least 1, 2, 3, 4, if we consider the overall double bottom here, 5 of these events. So the pattern might be getting old. We might indeed not be reaching yesterday's highs and rotate towards these lows. So some early opportunities would be nice, but unfortunately after this dip here, not much of a slowdown for a shallow pullback trade. There was a slowdown at the backside of the area, so this is the first place where you could short, but the V-shaped reaction really reminds of the pattern that we have seen earlier in the pre-market, and since this is still a higher low, not that high of a probability here working around this area. It seems that the market doesn't like working that much with the horizontal areas. It seems it prefers this pattern at the lows and at the highs, and this is really the controlling logic for this still bullish on the larger scale directional market, which with this significant counter-directional episodes. If you like the steep climb here, even though the placement is very aggressive, you could be looking to pick up one of these shallow pullbacks for the expected steep movement in the directional episode. Through the same prices, the market moves with the same quality and then ultimately gives us this new high towards 46.45. Some of the later shallow pullback opportunities had reasonable slowdowns, and since they're second times the charm opportunities above this reference point, they're also high probability trades, and ultimately they would have given you a little bit of an overextension here, which is what you should be looking for this aggressively placed trades. Once again, you can see that the curve was inflecting here to potentially give us this steep dip. However, the market inflected bullishly after 11 o'clock and broke these highs here, suggesting that 46.50 is all but certain. In thin air with an overextension, reasonable slowdowns. Don't wait as long as you get a reasonable slowdown and a well-defined stop, which unfortunately here even the local stop should be close to 2 points, maybe just under, but you're trying to give the market a little bit of wiggle room, which should account for the volatility. This one did give us a little bit of follow through, but definitely do take your profits with these opportunities as you find yourself here at higher and higher prices outside of the other bands. Ultimately, once again, we see the slowdown. We don't know how significant it will be, but we're getting these much deeper dips here. 11:30 is 2 hours into the session, and once again, we're getting one of these steep dips, which seems to be recovering, and this should be a familiar pattern, right? We have already seen the market experience this pressure right here, and this is usually suggesting that we're beyond the highest point and looking for the dip. So if you are paying attention to behaviors that are offered previously, which should be at this stage of the game your predominant reference point, then you could be even picking up some of these early shorts here as the market is looking to well, really fade the move after 46.50 was achieved. Good movement to the downside after the initial pressure. The market stabilized without falling into a cascade, which is what we saw here last time. So it's likely to be some form of a quiet trend or something else. So the deeper pullback trade, again, one of the low-hanging fruit opportunities of the session, as are these ones here, where you get a clear V-shaped reaction and the potential for price to cascade lower. These, of course, could be managed either with a perspective to back up and load onto another lower high, or they could be managed locally, looking to liberate yourself of an aggressive placement. Good movement to the downside, good dip here towards the beginning of the lunch hour for what is the logical retest of the backside of this area. Once again, still a higher low here, 5 or 6 iterations. I'm not even keeping count anymore, but this idea is getting old and loaded. Yesterday we did experience this sudden dip towards the end of the morning session. Today, not until the lunch hour is anything changing in the macro context. There was this steep movement here. Again, you could be interested in either early shallow pullback opportunities or this very well priced deeper pullback trade if you are already convinced that once again the pattern will repeat itself. Of course, you should be cautious that late in the pattern. You might be looking just for conservative target because of the potential here for the high to hold and for us to get some type of a change in behavior. It was a relatively slower market during the lunch hour, and for the first time as we rally to the upside, we don't manage to overtake the highs, and that cascade here ended very quickly. You can see that we're getting some type of mean reverting movement here beyond the expected deeper pullback respect. The market is actually leaning back towards the bottom, looking for more consolidation, profit taking. You can see that the pressure here once again was relentless, something we have already seen following the high. So a potential macro two-wave pullback, which is suggesting an attempt on these bottoms around 25, and if that was to happen, the next area is likely the 46.10, which is the regular session lows. And if we zoom all the way to the bottom here in this massive mean reversion, situation really developed into what is the second logical part of the day, which is the afternoon session. Right about 10 minutes before 1 o'clock, the market broke the support, and what followed through is a very, very steep movement here, as it appeared that nobody stepped up to prop this market virtually before it got to these regular session lows. You can see that this was one breath, one beeline move, 1, 2, 3, 4 of these shallow pullbacks before the vertical, which tapped the reference point. And then at around 1 o'clock here, the market started to consolidate. One deeper pullback trade in this vicinity here is fine. Once again, you can see that at the high, the market is offering the same pressure as the offer is aggressively moving lower and not allowing even a single high here to get taken out. So a good opportunity for you to get positioned if you trade the afternoon session. Once the market zooms down here, you could argue for a technically broken market, which is unlikely to stop at any one of these reference points anymore. They're too far back, they're all cold. The market is likely going for not only the overnight lows, but potentially even for the weekly lows. These highs here around 46.50 are rejecting price, not for the first time this week. So significant rotation in the afternoon session, lots of volatility. Make sure you adjust your posture, stay in the runners, especially if you get a good price. Don't look to trade for the points, but rather for the expected reference point that the market is supposed to get to, since you do get good staying power if you enter at a good price. You can see shallow pullbacks, deeper pullbacks, lots of good opportunities in the beginning of the afternoon session. We got a B trade here. Some out of band respect started to step into the equation later in the progression, so make sure you take your profits. We did rotate to the backside of this area, which is not at all surprising, but you can see that as price congested here, we got a rejection. Fist fight in the middle here around 130, where price was really supposed to decide which way next. Are we going to leave a higher low here to the overnight one and rotate back towards the top? Here, decision in the middle, or are we really going to respect the backside of this area and promptly zoom to the downside? There was initially here, it seems, some reluctance to get back above the mid-band, although more or less this was a 50-50 situation. Once we zoom to the downside though, it's a matter of time before we break the low. Notice that 4600 is what the market was hugging here in the beginning of the afternoon session, and once we cleared that level, whew, boy, did it accelerate or what. Lots of shallow pullbacks, massive overextensions. Remember, it's not only a matter when the market is that steep and that strong and the sentiment is both strong and consistent, it's not only a matter of taking shorts, it's also a matter of finding a reason to stay in the shorts or re-enter the shorts so that you can let this volatility develop in your favor, so that you can maximize the potential of what's available. Great movement on the way down. Counter-directional episode, correspondingly large. Notice that they're about the same size right here. This one maybe a little more significant. We got both soft and hard confirmation, so momentarily it appeared that longs might be viable as well, since we got very close here to the overnight lows, but that idea fell apart. Once again, in a familiar fashion, you can see the relentless pressure which the offer exerts on whatever bid is available here, still at a lower high, so somewhat similar to not only the behavior we have seen earlier in this progression, but it's an inverted version of what we saw here. With each one of these dips, the buyers were absorbing everything, and now on the way down, every time the market has a reasonable pullback, selling pressure appears again, and we get to new lows eventually. Lots of opportunities here. There's really, in a market like this, you will have to take breaks, you will have to pick your spots, and you're gonna have to adjust your posture, the sizes of your stops, and of course the sizes of your target to maintain a strategic and statistically viable reward versus risk ratio, if you will. Strong movement up. This is where in the middle of the afternoon session the market had a chance to become a mean reverting proposition. We did revisit this resistance area, and had we actually broken this high, it would have been likely we're going to rotate towards the middle of the daily range here, towards 46.20 probably, but instead price got rejected. And even though there was some back and forth, you can see this one here, we had a similar one right here, but just the sells were just relentless today. We got to the bottom once again, the press here observable right before we make the new low, or once we hit into another wave down, very similar to what we had here every time on lower highs. Not a single high got taken out here, and then the last hour was an absolute massacre here, getting from around 45.75 to well, losing at least another 75 points by the end of the session. Again, great directional movement. The weekly low here, which was also yesterday's low, didn't offer significant support, and down here in thin air, it was only a matter of getting into the shorts and holding them long enough to be worth your while. Beautiful cascades, these very predictable curves that we like to follow into the steep overextensions. Make sure you look for your round numbers so that you can last in these progressions and maximize the reward you get for your risk. Station back here to the backside of this weekly high, and then once again move back below 1, 2, 3 times, and just an absolute massacre here. Get short, stay short, and make sure the market pays you for the risk that you take. 4500 was tapped here within the session. A little bit of cautious profit taking, but man, it's really difficult to tell where this pressure is going to subside. You can see that this is not only a steep market, but also a very regular one, or a very consistent one. Plenty of opportunities. We do expect indeed the first day of the last month of the year, which is famous for fund managers and all types of large institutional money getting into the market, what they call window dressing, or buying the best performance, or selling, for that matter, the worst performance of the index. This coincided with quite a bit of news and opinions that hit the tape being midweek from treasury secretaries and Fed officials. So there's no shortage of stimulants for the overall volatility. What you should take away from this day is that being a savvy observer of the price action, especially the patterns that the market leaves behind, would give you an edge in a very volatile market. You should always ask for a good price. You should definitely not overtrade and try to make money out of every move in such markets. If you don't like a current episode of the market, remember you could always wait. Your edge as a retail trader is in actually picking your spots and waiting rather than being in the market all the time. There's a lot to be said about trading at a good price or trading with a reliable pattern. Go back and review this day. It's definitely going to be useful to your learning curve.